Good evening, everyone. Welcome to Ask Grit. We have Dulip with me today. And as usual, we'll be going through the questions we got asked from during the week from all our viewers on property investment, property management, property sales. The intention of the session is to add value to you. Dulip, what have you got this week?
Naveen, we have received a number of questions. So I thought, and welcome to all our viewers who are joining us live on the Facebook page of Grit Property Group and also via Aus News Lanka. So the first question we have received is, now that the home builder grant is finished, what other grants are available for first home buyers and investors?
Yeah, fair question. 31st of March was the last day for the home builder grant, so which means that $15,000 grant which was offered is gone now. But you still, as a first home buyer, you still get the $10,000 grant for metro as well as $20,000 for regional. At the same time, you get the stamp duty concessions as well as in terms of a first home buyer. Even as an investor, you still get the stamp duty concessions. So the home builder grant of $15,000 is gone, but you do have the other benefits.
Okay. Question number 2. As a first home buyer, can you walk me through the steps I need to follow to my first home?
Okay. Yeah, step number 1 is to check your borrowing capacity. So ideally, if you can speak to a finance broker or your bank, if you have a good relationship with the bank, check how much you can borrow. That might be the first step so that you know how much you can borrow, and then you can take the next step from here. Say, for example, you can borrow up to $500,000, and then if you also have a deposit of say 100,000 collected, you know your budget. You got to stick to 600,000. And as a first home buyer, your stamp duty will be waived off up to $600,000. So which means you don't have to pay stamp duty when you buy the first property. So step number 1 is do a finance check to see how much you can borrow. And then once you know your borrowing capacity, then it's a matter of finding the property based on the location you'd like to live in. You might have a preferred suburb. Then you might want to decide whether you want to buy a house and land package, which means you are constructing a house, or you're getting an established home. Once you decide that, you can do some research, go for some inspections, go check out some lands, and then take the next step of getting a pre-approval. Once you have a pre-approval, which means you are ready to buy, bank identifies you as a client who can borrow this much of money. That way you are ready to go and deposit on a piece of land or a property. So I think that's those are the few steps which you need to follow. But there's a lot more specifics in the process. If you're constructing a house, that's a different ballgame to buying an established property. So feel free to ask any questions if you have based on the path you want to take.
Thank you. This is a very common question we get, Naveen, working through the industry.
Yeah.
As a first-time investor, how do I get started? People are very sort of nervous and scared to sort of get into this. At a certain point in their life, they do see other people, doing it, but how do you get rid of those nerves, and how do you enter into the market as an investor?
Yeah, which is quite normal. But you got to take the punch. You have to invest if you are to make money and have some financial freedom in 10, 20, 30 years time. So the first step is get rid of the fear. The worst thing which can happen to you is you can't manage it, and you just have to sell it. You sell the property and recover your money back. That's the worst thing you could happen. But as a first step, it's about again getting a finance check done. If you might own a home, you might be renting, but if you want to invest, get a pre-approval in place so that you know that you can borrow the money. And then the next step is to do some research on what are the hot spots for investments where you can achieve a decent rental return as well as capital appreciation. Do some research. We can certainly help you with that. In terms of statistics, it's very good to, it's all about the location. Check the suburbs which are performing really well. Check the areas of the suburb which are performing really well. Check the amenities surrounded by it. How far is it to the bus station? How far is it to the train station? It's all about the location. Once you know all that, and then once you have the pre-approval in place, you should just go for it. And then it's a matter of managing your portfolio as you go along.
Thank you. We've seen some investments, over the years, we've seen some investments gone wrong as well.
Yeah.
Majority that we have luckily, fortunately witnessed are quite positive experiences for people, but that we have seen the occasional one that has not gone right as well. So the next question is a very important one in terms of that as an investor. What should I avoid doing as a first-time investor?
Few things we should avoid. One is don't overcomplicate it, meaning you should not be thinking too much on the statistics. You should not dwell on. Sometimes a common mistake people do is they try to get the property, the investment property where they live in. They might be living in a particular suburb. They want to invest in the same suburb, which is, it doesn't have to be close to you. You have to be looking at the best return possible you can get from your property. So, and don't ever buy on emotions. It's not the property you're going to live in. It's an investment. It's there for you to make money and to get the best return on investment. So don't go with your emotions. You don't have to buy at the same place you live in. And don't go by what someone tells you. Do your own research, and if your gut says yes, go for it.
Okay, now the important question, Naveen, this is something we have heard before. I have 3 properties and I want to increase my portfolio. How can I do it? I guess while you're addressing how you should do it, you should also address what to avoid again, or the risks that are associated with that as well. So that could apply to a lot of people as well.
Yeah, so just to reflect back on the question, he has 3 properties, and then what has to be done to expand his portfolio?
Correct. And I want to increase my portfolio. So how can I do it?
Yeah. So I think the first step is on that 3 properties, he or she might be having some equity on those properties. So I think we should do a check on what those mortgages are, and then what is the valuation on each of those properties. So let's say, for example, each property has $100,000 of equity. That means he has 300,000 of equity in those properties, which he can use to have 1 or 2 properties to expand his portfolio. Step number 2 is to include in those how much he can borrow for the property. So say, for example, he can borrow another 500,000 based on his borrowing capacity. He might be able to go for 2 small properties, or he might be able to go 1 property. So I think doing those 2 steps would be the first thing to do. That way he knows where he sits in terms of finances, and then it's a matter of going through. So again, the next step can be the 3 properties. 1 can be a home, other 2 might be investments, which is negatively geared. So he might want to add a cash flow positive property, which we can advise on. And then it's a matter of finding that right property, which will inject cash flow into his portfolio, and then go for it. But I think the first 2 steps is getting a finance check as well as an equity check done.
So just to clarify, where there is $300,000 worth of equity, in the scenario we mentioned, 100,000 from each property, an additional 500,000 loan to purchase the 4th property. Are you saying that they could borrow up to 800,000?
No, not really. So that 300,000 can be their contribution.
Yeah.
So I mean, in that case, the property value can be 800,000, or they can buy $1 $500,000 property, and another $400,000 property, and then put 20% each.
Okay. So use that as a deposit, use the equity as a deposit.
Yeah.
All right, thank you. Now, the next question is a good one. How long should I keep an investment property? We've heard about capital gains tax coming into effect at some point. So
yeah,
whether you should explain those first.
You should keep an investment property as long as you can, because the longer you keep, that's where the property appreciation comes in. And property is not a short-term game. You can't expect money to be made in 1 or 2 years. You should keep at least for 6 to 7 years. But the longer you keep, and if the property is brand new, there's more tax depreciation benefits from your tax returns, as well as capital appreciation benefits. The longer you keep, the better returns you'll get.
In terms of capital gains tax being applied to the profit you make from an investment property, is there a time frame that you could avoid that?
No, you have to pay it.
Either way. All right.
Unless there are certain scenarios where you have lived in a property.
Yeah.
Say you lived in the property for 5 years, made it an investment, and sold on the 10th year. Mm-hmm. So you got to pay capital gains on only that 5 years, and you get a 50% off as a resident anyway. So if you have lived in the property for a certain period of time, that amount of period time will be waived off. But only way to get rid of capital gains tax is selling your own property where you have lived in as a principal place of residence.
Right.
There is no way out, my friend.
Okay, thank you.
We have another question from one of the viewers, Gayan. What are the best suburbs to buy investment property below 600K? Yeah, there's quite a number of suburbs. It's if you're talking about Melbourne, you can still buy below 600 around Clyde, Cranbourne, if it's southeast. If it's the north, Mickleham is one of the best places to invest right now. If it's the west, you can always get things in Rockbank, Werribee. Tenant will be a little bit more than 600. You're looking at 600 to 700,000. But all those suburbs, you can find options below 600.
Thank you, Dan, for your question. Now, the next question is owner-builder concept a good one to build your own home? What are your thoughts on that?
That's a good question. Yeah, a lot of people think they can save a lot of money through owner-builder by building their own home. But I think I personally don't recommend it at all, because it has a lot of headaches as a owner-builder. You might be saving about $30,000 to $40,000 when you build your own home, but then again, I have never heard a story where they have completed the property on time by doing owner-builder. It has always dragged on for at least a year or two. So the amount of time you have to put in, the headaches you have to go through is just not worth it. Get one of the builders to do it.
Thank you for that. What happens if my builder goes bankrupt, and how can I avoid it?
Yeah, builders going bankrupt is, not common, but it can happen. How you can avoid it is go with a volume builder or a renowned builder who has been in the business for a long time, who has a cash flow to support your house. So if you go with any of those big builders, the chances are very less that they go bankrupt. But you get those private builders who has just started or not been in the business for a long time. If the cash flow does not support them, they can go bust, and that will have an impact on you. Again, how to recover your money is, let's say, for example, you give the job to a builder, they went through the process to up to about 2 or 3 stages, and then they go bust. Each and every builder, when they're registered with HIA, they have to have insurance to start a job. So you will get compensated from the insurance. There is a process you have to go through. So you can go through the insurance, claim the money, and then hand this over to another builder to carry on with the job. It's not a smooth process. It will take time. So best advice is to do your research on the builders, go with the renowned brand, can't go wrong.
Thank you for that. Question from another person that's written to us. This is not about buying or selling a property. This is about tenancy. I've signed a tenancy agreement for 12 months as a tenant, and it's only been 2 months, but I want to move out of the property. What are my options?
Okay, that's a tricky situation. When you sign a 12-month lease, you are liable to pay rent until 12 months. So which means if you want to move out for whatever reason, best case scenario is if you can find a tenant for the agent, and if the agent and the owner approves that application, then you can move out and let the new tenant take over the property. If not, you should let the agent know that you need to move out, you need to break the lease, and then they will advertise and find a tenant, but you need to pay the rent until they find a tenant for you. So you cannot get away from it. You will have to pay the rent until there is a tenant in the house because you have signed a 12-month agreement.
Interesting question. And lucky last question for you, Naveen. This is the 10th question for the day. Until we do another segment of Ask Grit. I think this applies to, again, a lot of people who are thinking, investing or developing what they have brought. I have this viewer has asked us, I have a 700 square meter site, which I want to do some townhouses on. How can I get started?
Yeah, that is definitely a good option. Based on where the property is, first step is to get a planning permit approved from the council. So you might be able to do 2 or 3 townhouses. You might have a design in mind. So a local architect can do this for you. If you need any help, we can do that for you as well. We do a lot of projects like that. First step is getting a planning permit approved. Based on the council, based on where you are, it can take up to 6 to 9, 10 months to get the planning permit approved. Once you have the planning permit approved, then it's a matter of finding a builder, demolishing the existing house, and go ahead with those plans. So typical one of these projects will take at least 2 years. But do your feasibility as well. Let's say, for example, 700 square meter site, you should be able to do 3, but certain areas can only do 2. If it is 2, see how much it will cost to build based on the size of the property, and then work backwards to see how much you can sell it for. You have to put certain other costs in place, things like your interest costs. There's so many other fees which you have to pay for the council. We can totally guide you through it if you have further questions on that to get you started. But planning permit first, do your feasibility, then get a builder to do it and sell it. But a lot of people do it. It's a very good way of making money if you have a prime piece of land. I think we have a few more.
More questions.
I heard the Queensland market is very hot at the moment. Is that true? The short answer is yes. Queensland market is very hot. In fact, I was just speaking to a developer this morning, and they were saying in some areas, especially southeast of Queensland, has gone up by $50,000 to $80,000. And especially the second-hand market is very, very hot. Time in the market is very less. A lot of established properties are getting sold very, very quickly. A lot of investors in Sydney is also very active in the Queensland market. I mean, not only Queensland, Melbourne, Sydney, Brisbane, all 3 states, especially, it's stinking hot. So what you have heard is correct. It is definitely hot.
I mean, talking about the Queensland market, could you explain to the viewers just a little bit on the dual occupancy projects that Grit is handling at the moment?
That's the most popular at the moment. Yeah, so dual occupancy is where you get a big piece of land, say about 450, 500 square meters, and you do 2 houses, which is attached to each other, but 2 separate entrances, 2 separate garages, so you can rent it out for 2 separate families, which means you have dual income coming in, typically about 600 to 650 a week, cash flow positive by at least $1,000 to $1,500 after paying a mortgage, which is very, very handy. And you cannot do this for that sort of price. You're looking at about $600,000 for a dual occupancy house. You cannot do that for that price in Melbourne or Sydney. So Queensland, especially for investors, is very popular for dual occupancy, and it's very, very good.
Thank you. I think we have
Another one. Can a
another question.
person from another country buy a property in Australia? What's the procedure and can they apply for loans? Yes, any foreigner can buy a property in Australia as long as the property is brand new. They cannot buy old properties as a foreigner. The process is very simple. The property has to be brand new. You have to get an approval from the government called Foreign Investment Review Board, or FIRB. You have to get the approval as long as the property is brand new. That can be taken care of. And then you can also borrow up to 60 to 70% of the property value. You cannot go higher than that. You can borrow up to 60 to 70%, and remaining 30% plus the stamp duty is your contribution. So as a foreigner, you can buy a property. You have to get the FIRB approval, and the property has to be brand new. That's the short answer, but we can certainly walk you through it.
I mean, I think that concludes all the questions we have to ask today.
Yes, and I think there's another one.
Oh, there's more. Not coming in, is there?
Is there a new airport coming in Sydney, and whereabout is it? Yeah, there is Western Sydney Airport coming in west of Sydney. It's close to Leppington, Austral. These are the suburbs which are close to the airport. Again, if you're thinking of investing in Sydney, that's a very good location to invest. Prices are still 800,000 plus because we're talking about Sydney, but that is real. That project is coming. Another question on Geelong. Is the Geelong to Melbourne railway, is that real? Is that happening? That is definitely happening. I think in one of the previous sessions, someone asked the question as well. That is definitely happening. That will cut down the travel time by rail to 45 to 50 minutes, which will be a game changer. It's like coming from Pakenham or Officer to Melbourne, but the lifestyle in Geelong, you can't simply match to any of these suburbs. So it's going to be a game changer for sure. Geelong is performing really well as an investment hub, and it will be a good place to live in as well, especially after this train line comes in. Thank you so much for the questions. Great questions again. We'll see you again next week. As I said before, intention is to add more value to you by answering these questions because you will be learning on the go. Feel free to post any questions on our Facebook page, or feel free to reach us on any of our social media channels, and we are more than happy to answer questions on our next episode. Until then, good night, good evening. Catch you next week.